be ready for the next round of purchase orders and maybe some other higher volume production. Is that when I come to this type of event?
Actually, it's for both. It's for both. And I think, the biggest thing for me and the company in general is to really help the people understand that there are different types of investors. And, and again, I say, if you can check out the show Shark Tank, you'll see that each one of the investors has their own niche, has their own idea and level of investing. And in terms of not having a product or having a product, each investor is different. Some investors, like when you are at the beta stage, you just developed, like you said, a prototype and you don't have any customers yet, because they may understand the market a little bit better, and you're coming to them at the right time where that's their specialty, to go to market, to really build up and to try to ramp up to get customers. Some individuals and investors may not have the experience or the may not be as comfortable with not having any customers yet, so they may invest only if you have a certain level of customer. The biggest thing, as I mentioned before, the investors that are different, because the risk-reward ratio is different. If I come in early, you may not have any customers, but if I believe in you and I believe you can take this to the next level and we grow, I would have gotten a bigger percentage in the beginning because you're at an earlier stage. And it really is about the risk-reward profile of the investor. And I always tell entrepreneurs and inventors to look at that, because the risk-reward profile of the investor is very important. Some investors like to invest when you may have only an idea. You may not even have a prototype, but they're going to maybe take more of your company. But at the end of the day, if you can have a value partner who understands your market and can go after specifics in terms of customers, in terms of growing your company to the eventual distribution or eventual sale to another company, those investors obviously are a little bit different. So it's for both. The people who have the product, prototype, people who don't have any customers, people who have customers, people who have been operating for 2 or 3 years and want to take their business to the next level, because there are a variety of investors. And I guess I can segue a little bit into crowdfunding, and in general, crowdfunding has opened the pool of investors. So now not only do you have VCs, angels, friends and family, you have the mass public being able to crowdfund and fund these vehicles and fund these inventions and fund these companies, because they may have a better or different incentive. They may just want to give because they like your idea. They want to give because of a social cause. So the motivation behind the investors are not always 100% motivated by maximum returns. They may be, as I mentioned, B Corps is an option, a dual focus. I want a return, but I don't want it to sacrifice for the good I'm trying to do for whatever around the world cause I'm trying to promote.
Okay, so to be prepared now as an inventor entrepreneur to pitch to this panel, what do we need to do? How much does it cost? And what happens? Do we need to be prepared with how much we're going to ask for? Is it a licensing deal? Tell us what we expect.
Sure. So as an entrepreneur or inventor, what you need to do is, of course, and to apply to our pitch session, you need to have a business plan. And a business plan including, your projected financials, market data. And on the site, once at the end, I'll email you, Brian, and you can share with your listeners that when you upload and apply, you have to have those things, the business plan and the financials. So you upload the documents, and then you fill out some other information about your company. And normally we are accepting of companies that have either incorporated, obviously, because if an investor comes to you in terms of wanting to write a check, you have to be incorporated as a C Corp or B Corp in general. So those are some of the preliminary requirements for the companies and inventors on our platform. However, a lot of investors don't use our platform currently for investment. So I would recommend, no matter what your structure is, as long as you are incorporated in some fashion, to apply. Otherwise, you have to have a business plan and financials and market data to apply to pitch to the sharks.
Okay, and how much does it cost?
The cost is, I believe, $50 to pitch to the shark or to apply to pitch. But I think what we want to do is, because we did extend the deadline to Wednesday, we can offer your members or your listeners, Brian, a discount for that, as we think there's a lot of talent out there, and we don't want anyone to miss the opportunity just because the cost of paying for something. So I will send you an email about that as well.
Oh, that's great. Thank you. All right. So, and what about the tickets? If we want to just come and watch what's going on, how much are the tickets?
So there are a few options for the tickets. There's a student ticket. If you have a student ID, you go to a college, university, taking classes. When you arrive, all you need to do is show your student ID. Those tickets are $35. What we're calling the post-networking, networking and main event, if you want to come to network with the panelists, you can buy that at the URL you mentioned, smeshark.eventbrite.com, and those tickets are $50. And then the tier above that, the $100 tickets, are actually sold out, but sold out meaning that the $100 level is the pre-networking event, which we call the food and drinks. But if we have a few select reserve tickets available at that price range, so if anyone wants to purchase the few kind of reserve seats that we've held, they're welcome to email you. You can email me directly through my email, Jeremy@SmartMoneyEntrepreneurs.com, and we can fill you in. So there are a few spots at that $100 level, and you'll see the tickets on Eventbrite.com.
That's great. Jeremy, if we can't make the event and there's entrepreneurs, inventors that are listening that want to find how to raise money and where to raise money, can you provide any resources on where to look these up? And one important part also, just like licensing or anything that you do, you want to be able to make sure that you're asking the right people, you're asking the right company to invest in your company. I mean, if they're a technology company and you're doing something environmental, I don't know, are those important questions to ask or to look?
Yes, absolutely. I mean, those are really important questions to ask, partially because if you look at a company, the biggest thing you can do to help an investor is to say, where do I fit in, or a company that's investing in you, where do I fit in to help you get to the next level? And if you can make their job easier, that's, at the end of the day, what they're looking for, a synergy, a fit. And if, as you mentioned so eloquently, if you building semiconductors and go to a life sciences company, that may not be a good fit. However, look at the companies that are in related industries, and the related industries a lot of times may be high tech, and then tech in healthcare can relate because of the healthcare. The things that are changing in healthcare, technology is destined to play a big role in that. So if you're a pure play technology company, think about getting into maybe healthcare as a ancillary type of vertical sector, and looking at those trends of who and where you're going into in terms of the market space. Look at not only industry companies in your industry, but ones that are closely related or are looking to get into a space that you are currently in.
Okay, and where do you find these type of companies, Jeremy?
So normally I would always recommend to do some market research. And what I can do, Brian, I usually have a resource list that I can forward to you.
Oh, great. We'll
but
put
generally,
that in
you can go to any major publication that follows public companies, private companies, and get information usually up to date about what they're looking to do next. And it may be, a statement or a newsletter saying, next year we're looking to get into X, Y, and Z. So when you approach them that year, they may be more willing to, sit down with you when they do their annual budgets or do their forecasting and do their acquisitions. So when you're ready to pitch to these companies, they know you've done your research, and they're more likely to be accepting of what you're looking to offer them.
Okay, and I know there's quite a bit of crowdfunding platforms that are out there. Now, what actually makes Smart Money Entrepreneur a different equity crowdfunding platform than the others that are out there?
Right. I'm going to give away my secret sauce. I know my rest of my team would maybe not give away everything, but essentially, what makes us different are two things. for the first time in this industry, I'm a big believer of transparency. And one of the things that has been lacking in a lot of public markets is being transparent. You know, you look at certain stocks that I've kind of stayed away from, that have gone public. Facebook, a lot of investors thought they got taken for a ride, a few other companies, and, things happen. But I think for me, it's about transparency and being honest with what's going on with the company. So we actually provide real-time monitoring, real-time data for the investors on our platform. So if you have a company and you're looking to raise capital, knowing that you have to have full transparency for the investors is something the investors on our platform have really been excited about. For the entrepreneurs, we have what's called a partner program in which the entrepreneurs who are raising capital are really handheld and taken from the initial stages past the funding in terms of being a mentor. So that's what kind of we do in terms of raising capital on another platform. If you look at the top ones, Kickstarter, Indiegogo, after you raise the funds, Brian, here are the funds, and you go off and do your own thing. There's no type of support at all. And we're really big about transparency and support because any major angel investor or venture capitalist will tell you it's not about the money. It's about what happens after that and the type of resourcing and network connections that the investor brings with the money that makes company A more successful than company B.
Sure. And what you're saying also, I know that a lot of our listeners out there enjoy that Shark Tank show. And it's really about, okay, what have you done so far? And if I gave you the money, what are you going to do next? I don't want to be the person running your company. I want to know what you're going to be doing. But you may not 100% know what you're doing, and you might need some help. So there's a certain level of help that can be contributed, but people don't expect to be running your business.
Absolutely. And investors don't have time because if they did, 100 investments that they make, they would have to be running 100 businesses. And, a lot of times, they're not the experts in the business. You are as an entrepreneur or an inventor. And investors generally want you to run and be the best you can at your business, which is why they invest in you in the first place.
Well, that makes sense. Jeremy, any final words of wisdom to the inventors, to the entrepreneurs listening out there? Help them with, there's some people that are at the beginning stages. There's some people that are stuck in the fork of the road. There's some people that are just at the point where they need to get their product or service noticed out there. From your experience and what you've seen throughout business and products and so forth, what sort of ideas or tips can you give to the inventors? Final words.
Sure. So final words, when you're approaching an investor in general, there are a few tidbits I say don't say. So before I go into what to say, don't say I'm just the idea guy, and I have a lot of sometimes entrepreneurs say that. The investor wants to know of course you may have an idea, but wants to know that you are going to stay with the company, really go to grind, and saying I'm just the idea guy makes the investor feel that, okay, well, if anyone can come up with an idea, what makes you so special? One of the other things, sometimes you may have heard it too, if I just get 1% of that billion-dollar market, just 1%, investors, again, that's the general thing, narrow your focus in your target market. And in general, I always say, don't let pride get in the way. If an investor is looking at taking more of your company than you want, think about why. Have a discussion. Like I said, it's a negotiation. It's a negotiation that kind of goes on to, well, maybe they're bringing more value than you may initially see, which is why the risk-reward ratio is higher. To flip sides, recommendations in terms of entrepreneurs and inventors who are trying to get to the next level, a lot of times it's about market, right? About what customers see, what customers feel. And a lot of the industry, whatever industry you're in, at the end of the day, the customer is the one who's going to buy your product. So don't build in a silo. Really identify who your customer is and are they willing to pay. If it's a penny, if it's $1, really identify what value they're looking to pay for your product and go to them. They may tell you many times that your product is, not what it should be, and don't become too prideful in that. Take a step back, and maybe they're telling you that because they're trying to help you. And your customers, at the end of the day, I find more times than not, will tell you what is wrong or what is right with your product by buying